Hi guys, so today we'll be studying essay 570, which is on going concern. Now first let's discuss the meaning of this terminology called going concern. We keep using and hearing this concept a lot in accounting and in auditing. We always keep hearing that the going concern basis should hold true for a company in order to prepare its financial statements on the going concern basis. But now, what is this going concern? We also hear it in accounting as one of the three fundamental principles of accounting, one of which is going concern, the other two being consistency and accrual. So, what is the simple meaning of going concern? Now, going means continue, concern means company. So, going concern essentially means that the company will continue. The company will continue to operate in the foreseeable future. That is the meaning. That is, the company will continue to operate in the nearby future. So when we are saying that the going concern assumption holds true for a company, we mean that the company will continue to operate in the nearby future. We don't see the company shutting down due to any reason. There is no reason, there is no situation that might, force or induce the company to have to shut down its operations. So that is the simple meaning of the term going concern. Now let us see the first question, going concern basis of accounting. Under the going concern basis of accounting, the FS are prepared on the assumption that the entity is a going concern and will continue to operate in the foreseeable future. General purpose financial statements are prepared using a going concern basis of accounting unless management intends to liquidate the entity or cease operations or has no realistic alternative but to do so. So it talks about three reasons here why the going concern basis may not hold true for a company. It is because management is intending to liquidate the company. Management just wants to shut down the company for some reason. Cease operations, management wants to shut down operations, or it has no realistic alternative but to do so. Now what is the meaning of this part, no realistic alternative but to do so? Maybe there has been some fraud committed by the company and the court has ordered the company to shut down, or the court has ordered the company to be liquidated due to some court case, due to some reason, due to insolvency or bankruptcy. There can be several reasons why the courts have asked the company to liquidate its business. So the company, even though it may have the intention to continue its business, but because the court has ordered closing down of the business, the company will have to abide by the court's ruling. That is why the going concern basis will not hold true in this case also. Point number 3, when the use of going concern basis is appropriate, assets and liabilities are recorded on the basis that the entity will be able to realize its assets and discharge its liabilities in the normal course of business. So when we are saying that the going concern basis holds true for a certain company, we mean that the assets will be realized in cash in due course of business and liabilities will also be settled by us by payment in due course of business. There is no reason why our assets will not be realized or why we will not pay off our liabilities. Both the things will happen because the company is a going concern. Only when going concern is threatened, these two things may not happen appropriately. We may not have the money to pay off our liabilities. We may have to sell off our assets at prices lower than what it can fetch, lower than its fair value, because it may be a distress sale. So this is what happens when the going concern basis is inappropriate. Now the next question, which is an important question and a simple question also, events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern. So this question speaks about different kind of examples that may indicate that the company is may no longer continue as a going concern. Okay, now in this there are three types of indicators. There are financial indicators, operating indicators, and other indicators. So first we will see the financial indicators. Number 1, net liability or net current liability position. Liabilities are exceeding assets, current liabilities have exceeded current assets. So that is an indicator of a financial indicator of a going concern issue. Then fixed term borrowing approaching maturity without realistic prospects of renewal or repayment. Your borrowings are approaching due date, but there is no realistic kind of evidence that you may be able to renew that borrowing, or you will be able to repay the borrowing. Next, indication of withdrawal of financial support by creditors. Creditors are no longer giving you credit. Negative operating cash flows, adverse key financial ratios, substantial operating loss, significant deterioration in the value of assets used to generate cash flows. So this could be a plant, an integral plant that you are using in the manufacturing of your company. If that plant stops functioning properly and it may require a lot of cost to get the plant to work again, then that is an example of significant deterioration in the value of assets used to generate cash flows. Then arrears or discontinuance of dividends. You have not paid off dividends that you have declared in the past, or you used to declare a lot of dividends in the past but now you have stopped declaring dividends. So these can also be indicators of going concern issues. Inability to pay creditors on due dates, inability to comply with terms of loan agreements. You're not able to pay interest on time, principal, whatever the terms of the arrangement are. Change from credit to cash on delivery transactions with suppliers. So suppliers do not have trust on you anymore. They think you have a low credit rating. They don't have credit trustworthiness on you, and hence they ask for upfront cash payments and are not ready to give you a credit line. Inability to obtain financing for essential new product developments or essential investments. There is nobody ready to give you a loan. Okay, so what are some operating indicators? The management intentions to liquidate the entity or to cease operations. So this is a direct indicator that the going concern is the company may not be able to continue as a going concern. Next point, loss of key management without replacement. Your CEO, CFO are leaving the organization, and that is an indication that the going concern may not be appropriate. Then loss of a major market, key customers, franchisee, license or principal suppliers. So these are all the key factors from whom you are earning revenue. So if you lose any of these key components, then the going concern may not hold true. Next, labor difficulties, shortage of important supplies, emergence of a highly successful competitor. So all the operating indicators are quite self-explanatory, and any of these, any of these situations occurs, then the going concern may not hold true for a company. Now let us see the other factors that could cast a significant doubt on the entity's ability to continue as a going concern. Non-compliance with capital, statutory, regulatory requirements such as solvency requirements for financial institutions. Now banks have to maintain capital adequacy ratio, insurance companies have to maintain a solvency margin, and this is a mandatory requirement. So the fact that they are not able to comply with any more can be an indicator that the company may not be able to continue as a going concern. Next, pending legal proceedings that, if successful, may result in claims that the entity is unlikely to be able to satisfy. So there is some court case that is going on, and tomorrow if the court case goes against your favor, you may have to pay off a huge amount, and that amount you may not be in a position to pay. So this could also be an indicator of going concern issue. Next, changes in law, regulation, government policy expected to adversely affect the entity. So some kind of products you are selling that have been suddenly been very much regulated, so that can affect your business, and that may be indicator of a going concern issue. Next, uninsured or underinsured catastrophes when they occur. For example, if an earthquake has occurred or a fire has occurred in your go down and you have not insured it, or you have underinsured it, so that can also be an indicator of a going concern issue. Now, next question, who is responsible for assessment of the entity's ability to continue as a going concern? Very important, always remember that management is responsible for assessment of the entity's ability to continue as a going concern. Similarly, as the responsibility to prepare the FS lies with the management, auditor is only going to evaluate the appropriateness of the preparation of the FS, and he is also going to check the appropriateness of the management's assessment. So similarly for going concern, see the first point, management is responsible for the assessment. Point number 2, management's assessment involves making a judgment. Obviously, going concern, nobody can say that the going concern will hold true. Nobody knows if an earthquake is going to come tomorrow, but you make a best case judgment today, that on the factors or the indicators available today, you feel that the going concern may continue or may not continue, right? So next, this judgment may involve considerations of the following factors. So the management may consider the following 3 factors while making their going concern assessment. Factor number A, the degree of uncertainty associated with the outcome of an event. This could be a litigation or a claim, and the degree of uncertainty associated with its outcome. Number B, the size and complexity of the entity, the nature and condition of its business, and the degree to which it is affected by external factors. So this could also be an factor to be considered for assessment. Third point, any judgment is based on information available at the time of making the judgment. Subsequent events may result in inconsistencies with judgments made earlier. So this is quite obvious. When you are making a judgment, you are making it at a certain point. After that point, if some events come into attention, then that may not hold a judgment that was made earlier completely true. So that may cause inconsistencies with the judgment made earlier. So that is something we need to remember when we are checking the going concern. Next question, important. What are the responsibilities of the auditor as per SA 570? One second. So the first point, the auditor must obtain sufficient appropriate audit evidence regarding the appropriateness of management's use of going concern basis of accounting to prepare financial statements. He must conclude whether a material uncertainty exists about the entity's ability to continue as a going concern based on the audit evidence obtained. So see, during his audit procedures, he would have obtained a lot of audit evidence. That audit evidence and the other inquiries that he has performed of management may, have any of the indicators mentioned above. We saw in the answer, financial, operating, or other indicators. So if any of those indicators are present, that may highlight an issue of going concern to the auditor, which he needs to investigate. Point number 3, he shall evaluate the management's going concern assessment. Fourth, if management's assessment covers a period less than 12 months, the auditor shall request management to extend the assessment to at least 12 months from that date. So this means that a going concern assessment that is made by management should cover a period of at least 12 months. The management has to estimate whether going concern is appropriate for the entity for at least the next 12 months from the reporting date. It cannot be less than 12 months, and if it is less than 12 months, the auditor should request the management to extend its assessment. Fifth point, the auditor shall also inquire management of events or conditions beyond management's assessment that may cast a significant doubt on the entity's ability to continue as a going concern. So this is an additional inquiry basically. So the management, let's say for example, has covered 14 months. So the auditor may also inquire that post 14 months, will you have any event, do you see any event happening that may cast a significant doubt on your entity to continue as a going concern. Last point, the auditor shall obtain a written representation as per SA 580. Okay, so now we are on our last answer. Additional audit procedures when events or conditions are identified. So this is speaking about a situation where you have identified that there are events or conditions that are casting a doubt on the entity's ability to continue as a going concern. So in such a case, what audit procedures should you be performing? So the first point is analyzing and discussing the cash flow, profit, and other forecasts with management. So you will take up all these forecasts like the cash flow, profit, and other forecasts, or maybe budgets, and you will discuss these with management, and you may try to put up your point as to why you feel that the going concern assumption is no longer appropriate. Next, analyzing and discussing the entity's latest available interim financial information. So let us say you are performing a year-end audit, 31st March audit, and this audit is going to conclude on 31st of July. So in the meanwhile, you may have the latest available interim financial information that is for Q1 next year, that is 30th June. So you can look at this financial information also to check whether the going concern issue still exists or the company's operations and the company's profitability has improved. Next point, reading the terms of debentures and loan agreements and determining if they have been breached. So this would be an indicator of a going concern issue. Next, reading minutes of meetings of shareholders, those charged with governance and other committees to identify financial difficulties. So the meetings of these minutes can indicate financial difficulties that the management has discussed in their meetings, and how do we obtain alternate sources of financing. So these could be indicators of going concern issue. Next, inquiring of the entity's legal counsel of litigations and claims and their possible outcome and financial impact. So we will inquire of the legal team of the company as to what litigations and claims are pending, what could be their possible outcome, as to whether they will be judged in favor of the company or against the company, and if they are against the company, what could be the financial outcome, like how much will the company have to pay up, and does the company have a capacity to pay up that much of amount. Next, confirming the existence, adequacy, and terms of borrowing facilities. So we need to check that borrowing facilities are adequate and the company has favorable terms in the borrowing facilities. Last point, obtaining and reviewing reports of regulatory actions. Any kind of regulatory checkups, regulatory inspections have happened at the client, we should obtain a report of the conclusions that the regulatory checkups, regulatory inspections have had. We should go through the conclusion and see what points or what conclusion has the regulator made about the operations of the company. So this is it about SA 570. Quite a straightforward standard, but a very important standard. I hope y'all have, y'all have liked this video and y'all have understood every question. Please do like, comment, and subscribe my channel. Also follow my Telegram channel. The username is CA Newton Lobo. Thank you for watching this video and see you in my next video. Bye.